Chevron, ticker symbol CVX, is one of the largest energy companies in the world and a cornerstone of the global oil and gas industry. Founded over a century ago, Chevron operates as an integrated energy major. That means it's involved in nearly every part of the energy value chain, from exploring and producing crude oil and natural gas, to refining fuels, to distributing petroleum products worldwide. Chevron's business is typically divided into two main segments: upstream and downstream. The upstream segment focuses on exploration and production. This is where Chevron drills wells, extracts crude oil and natural gas, and develops large-scale energy projects across the globe. The company has major operations in the United States, including the Permian Basin, as well as international assets in regions like Kazakhstan, Australia, and the Gulf of Mexico. The Permian Basin in Texas and New Mexico is especially important. It's one of the most productive oil fields in the world, and Chevron is one of the largest operators there. This region has been a major growth engine, helping Chevron increase production while keeping costs relatively competitive. Internationally, Chevron is involved in large liquefied natural gas, or LNG, projects. LNG has become increasingly important as countries seek cleaner burning alternatives to coal and as global energy trade expands. Chevron's LNG assets in Australia, for example, position it to benefit from long-term global demand for natural gas. The downstream segment includes refining crude oil into gasoline, diesel, jet fuel, and other products. It also covers marketing and distribution. Chevron owns and operates refineries and sells fuel under its brand across multiple markets. This diversification helps balance the company during periods of volatile oil prices. When oil prices are high, upstream profits typically surge. When oil prices fall, downstream operations can sometimes provide stability because refining margins may improve. Chevron's financial strength is one of its defining features. It has historically maintained a strong balance sheet relative to many peers. During energy downturns, that discipline has allowed Chevron to continue paying dividends and maintain investment in key projects. Dividend stability is central to Chevron's investment appeal. The company is considered a dividend aristocrat in the energy space, having raised or maintained its dividend for decades. Many long-term investors view Chevron as a reliable income-generating stock, particularly during inflationary periods when energy prices rise. Another important factor is capital discipline. After past energy booms and busts, oil majors became more cautious about overspending on large projects. Chevron has emphasized returning capital to shareholders through dividends and share buybacks rather than aggressively expanding at any cost. In recent years, Chevron has also made moves to strengthen its portfolio through acquisitions and strategic investments. Consolidation in the energy sector has been a major theme, especially as companies position themselves for long-term supply stability. At the same time, Chevron is navigating the global energy transition. While oil and gas remain its core business, Chevron has invested in lower carbon initiatives, including carbon capture, hydrogen, renewable fuels, and bioenergy. These investments are still relatively small compared to its traditional operations, but they signal an effort to adapt to a changing regulatory and environmental landscape. However, Chevron's primary revenue driver remains fossil fuels. That means its stock performance is closely tied to commodity prices, geopolitical tensions, OPEC decisions, and global economic demand. For example, supply disruptions, wars, or OPEC production cuts can drive oil prices higher, benefiting upstream profits. Conversely, recessions or oversupply can pressure energy prices and margins. From a macro perspective, energy remains essential to global economic activity. Transportation, manufacturing, aviation, and petrochemicals all rely heavily on oil and gas. Even as renewable energy expands, global demand for hydrocarbons continues to play a critical role. Chevron's competitive advantage lies in its scale, resource base, operational expertise, and financial resilience. It can weather downturns better than smaller exploration companies, and it has the infrastructure to operate globally. In simple terms, Chevron is not a high-growth tech disruptor. It's a cash-generating energy giant tied to global commodity cycles. For investors, it often represents exposure to oil prices, inflation protection, and dividend income. as long as the world depends on oil and natural gas, and that dependency remains significant, Chevron will remain a central player in global energy markets. That's Chevron explained.